Whether this rally is sustainable and what will be the impact, how should you be approaching? Abhishek Basu Malik is joining us from Kolkata for more. Abhishek, this changed narrative was not in the price in your view. How do you see the prognosis going for the markets? If rates indeed start coming down mid of next year, which means in the next 6 months, how would equities and asset class behave?
So my sense, Ajay, is that US rates will not come down in the next year. The markets, if you see over the last 6 months, they've been continuously oscillating, trying to take cues from everything that the US Fed and Colin Powell is talking about. Markets continue to be in a range globally, uh, especially in US, Europe, economy is weak. I don't see that changing, and no, U.S. Fed is going to take their eye off the ball for inflation until and unless they're very sure that things have really cooled down. So I don't see any change in stance very quickly. If I look at India, I think India is going to probably see rate cuts before the central elections next year. That's in my opinion a pretty high probability. So Indian markets could actually outperform or surprise on the upside.
Okay, so Indian markets will surprise on the upside, but at the same time, you do not see a strong case for rate cuts in US. That is interesting. So you mean Indian markets will upside, the surprise on the upside will come on the back of domestic factors, flows, earnings?
Absolutely. Absolutely. If you look at the numbers, Ajay, just look at the S&P 500. For all the stocks that have announced results till now, EBIT growth has been roughly 36.8, 37%. It's phenomenal. I mean, the kind of growth that we've seen, and this is sustained. I mean, for multiple quarters, we are seeing sustained EBITDA growth, sustained PAT growth. Revenue growth has been slightly lackluster. I think that might start changing over the next 2 to 3 quarters. But India definitely is in a very, very strong wicket.
Where have you been adding, Abhishek? What are you researching right now?
I think
Looking comfortable with something?
I think the
Looking
same old
comfortable.
sectors. There's a huge amount of focus in the transition economy, as I call it. That comprises of transition from fossil fuels to renewable energy, comprises of transition from 2G, 3G to 5G, probably 6G in the near future. Uh, and transition in that. So all of these transition sectors are very interesting. Uh, Large inputs in railways, in infrastructure that is getting built, metro rails coming up. If you look at the number of cities that are proposing or starting work on metros, just phenomenal, right? And so that is, I think, going to be a sustainable theme at least for the next 2, 3 years, if not longer.
How's your portfolio looking right now, Abhishek? What are your biggest overweight positions or sectors?
I think we have fairly large positions in the railways, in capital goods, some in pharma, uh, more as a turnaround kind of story. Uh, Banks and NBFCs is something I like. MFIs have been doing really well. They've, I think, got a sweet spot of the next 1 year at least where they can do well. So essentially, the infrastructure related real estate infrastructure, capital goods, railways, that is the space where things are looking really interesting.
All right, Abhishek, we'll let you go on that one. Thanks so much for joining us for that take. So, Abhishek was making a very important point that don't read too much about the narrative which is being spoken about on the rates front, especially in US, but at the same time, earnings will drive, domestic flows will drive rally in India, and it could be surprising everybody on the upside. Take a break.